Hello traders, Gary Wagner here. Just about 12:30 in Honolulu, 5:30 in New York. It is Tuesday, December 29th, 2020, and this is the Daily Report for Gold and Silver. We had a mixed bag in the precious metals markets, with gold closing fractionally higher and silver closing lower on the day. Those gains in gold and a curtailment of the drawdown in silver were all due also to dollar weakness, which we'll talk about when we pull up our charts. But first, to the price board. Traders, the dollar giveth and the dollar takes away. In the case of today's action, it was 100% dollar weakness that resulted in higher pricing in gold futures, spot gold, and forex gold. It also sustained the drawdown that occurred in silver, which did lose about 0.8% on the day. The dollar broke through a key psychological level, 90, and is currently bid at 89.92 after losing about 0.4%. And when we look at February futures, which is currently at 18.82, up $1.60, you can see that the net change of about 0.1% is roughly a quarter of the move that we saw in terms of dollar weakness, which means that there was fractional selling pressure in the gold market today. However, the tailwinds from dollar weakness were able to overcome them. When we look at spot gold, that is currently fixed at $1,877 and change, up about 0.2%, or a net gain of about $4.26. GLD gained almost 0.4%, 0.36%, and is currently trading at $176.35 per share. We'll go over to silver. Silver did have a sell-off today to the tune of 21 cents, about 0.8%, with most active March COMEX contract trading at 26.32 cents, and SLV $24.39 per share. And lastly, the ride in Bitcoin, at least for today, is not over. $27,390 per coin. Let's take a look at our technical studies. Traders, the key to where gold trades to through the end of this year and, of course, the first quarter of next year is really intricately tied to dollar strength or weakness. In the recent case, it has been dollar weakness that has provided some nice tailwinds in which we've seen gold rise through the month of August, when it hit its all-time record high at 2,088. Each candlestick on this chart represents a full month, and it's the only way I could fit in the entire data set that we're using, which really begins in 2008, when the dollar was trading just at about 71, up to the record tops it came in at the end of 2017, beginning of 2018, when dollar value went to 104. We can see that it hit that particular price point for a brief instant, and this, of course, would have occurred in March, when we saw gold take that final plunge lower and the dollar have one last hurrah in terms of hitting these record highs here. Since then, we've seen consecutive months that have resulted in red candles, which simply means that month in and month out closed below its opening price at the beginning of the month. The exception, of course, is this one green candle, when we had a really brief attempt to find technical support at 91.22. That is the 0.618% retracement, but we have broken through there, which tells me that the next real level we can look at is going to be 88, and that is really based upon these series of bottoms that came in back in 2018 at the beginning, and then with real support at about 87.30, and that, of course, is the 50% retracement. Below that, 83, which is the 38% retracement. Now, I'm not under the assumption that we'll see the dollar track as low as 83, but If it would, that would be a further decline in terms of the dollar value by about 6%. And when you take a look at the move of 104 down to 90, which it just broke through today, that is a 14% decline in the dollar's value just this year alone. Traders, I also want to take a long-term view of current activity as it reflects in a monthly candlestick chart. What we can see is a pretty methodical decline in terms of pricing, which resulted in 4 consecutive months of a monthly price decline beginning in August when it hit the all-time record high at 2,088 and then following through 3 months thereafter. The other thing that's interesting is we can see that we had equal lows both this month as well as November. They came in at around $1,765. Most noteworthy is that we've got a long green candle occurring for the month of December, which bodes very well in terms of bullish market sentiment next year. The last gold chart that we will look at on today's show is a daily candlestick chart. What we can see quite easily is that recent ranges have been defined by the 100-day moving average and the 50-day moving average, and that's in green. We've also drawn in a resistance line by simply fixing some of these highs here, these 3 highs, as well as a very defined lower support level that comes in off of the lows here at 1771. And of course, this bottom that came in at around 1695. The question is whether or not gold will have the power to break above current resistance, or will it continue to be range bound? Traders, therefore, my recommendation is that you maintain your current long positions in gold and silver, along with GLD and SLV. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.